and I think I'm a little bit behind on posting those up. So I'll try to get to that tomorrow, hopefully, or maybe Thursday, to post up tonight's recording and the other couple that one or two that I think I'm behind on. Okay, so let's go ahead and everybody hold your breath and say your prayers if that thing goes into tablet mode without any problems. It looks like we're okay. And let's go ahead and just take a look at the table of contents for chapter 3. And the big point value here, even though they've broken this into 3 different modules, it's really all one large area, which is cost/managerial accounting. They're calling it cost accounting here, but it really has some managerial accounting aspects to it. That's about 15 points on the exam. So this is a fairly heavy area on the exam. Obviously, they're going to expect a CPA to know something about cost accounting. And so they're going to, give you those 15 points here in the BEC exam. The remainder of this area, which is really another one of those formula-driven modules, is going to be about 5 points. And we'll get into that and spend a little bit of time with that next time. My anticipation is that next time we will actually complete chapter 3 and probably have sufficient time left over to make a good start into chapter 4. Okay, so let's just go ahead and let's start to take a look at cost accounting/managerial accounting. And the first thing I want to look at is right here on this little chart here. Okay, and I almost thought about playing a kind of funny video, but I didn't really feel it was worth our time for me to find it and play it and figure out how to show it to you. But there's this old comedy routine where this guy used to, they'd start out, they'd call him Mr. And he didn't want to be called Mr. So he'd go through all these different names you could call him, but don't call me Mr. was always the thing at the end of it. And it was just sort of this silly comedy routine. And I think about that when I look at this, because what ends up happening is there's a bunch of different names for the same thing. And part of our challenge is the definitional aspect here is we have all these different names to describe what are essentially the same thing. So you can see here that we talk about product cost. Let's start with that. And our product cost include direct materials, direct labor, and our factory overhead. These are all considered product costs, but they are also considered manufacturing costs. Same thing, different name. Okay, that's what I do. The guy would say, you could call me this, you could call me that, but don't call me Mr., right? Okay, so what happens? You could call them product costs, you can call them manufacturing costs. And then to make it even more annoying, they take what? They take our direct materials and our direct labor and call them prime cost, okay? And then they take our factory overhead and our conversion costs, in our direct labor, and call them conversion costs. So direct labor can be called a prime cost, it can be called a conversion cost, it can be called a product cost, it can be called a manufacturing cost, but he doesn't have to call it Mr. Okay, it was the way that guy would always end that little speech. Okay, now as we look at these costs, okay, they will start out as basically raw materials and salaries payable and whatnot, and then they will go to work in progress and finished goods, and that is all inventory, various types of inventory, right? Work in process, finished goods inventory. And then they become cost of goods sold. And as you well know, when they are reported on the cost of goods sold, they are reported on the income statement. Okay. Now, when we look at our direct materials and our direct labor, those obviously are direct cost. When we look at our factory overhead, and sorry guys, I'm just running out of places to write all this. Factory overhead are considered indirect costs. Now, sometimes especially for my newer students to managerial cost accounting. They think that God comes down and says, this is a direct cost, this is an indirect cost, and that's not how it works. It's really defined on what? On how difficult it is to trace a cost to a product that determines whether it's direct or indirect. Well, direct labor, direct materials, it's pretty easy to trace those, so we call those direct. Indirect costs, we're going to have to apply them to a particular job, to a particular product in order to account for them correctly as they go through work in process, finished goods to cost of goods sold. And so there's a couple of costs that are obviously indirect because they have the word indirect in front of them. Okay, so we have what? Indirect labor, indirect materials, and then what I like to call the others. Okay, and whenever I use that term, the others, for these, it reminds me of this movie with Nicole Kidman where these dead people kept coming to her door and trying to tell her that she was dead, and it's a whole like scary movie, and every time it's on I have to turn it off because it scares me. Okay, but anyway, the others, okay, include things like depreciation, okay, depreciation, rent, we have to pay a rent, okay, utilities, okay, property tax. Just looking at my notes here of some things I brainstormed on that when I was looking at this earlier that might be considered part of the others. Okay, now you can understand why it would be difficult to allocate or to directly trace, I should say, the depreciation directly to any one job. Okay, what this job used up so much floor space while it was out there, so we're going to apply the overhead that way. No, what we end up doing is we end up using some sort of driver to apply those costs to the job, and we're going to talk about that here a little bit tonight. Okay, so as you look at this thing, guys, and you can flashcard this picture, but we have the same terminology, or different terminology, I should say, to describe the same thing. So we have what? We have our manufacturing costs, also known as product costs. What are our manufacturing / product costs? Direct labor, direct materials, and then indirect costs, which is our overhead, right? Then to make things a little more difficult or a little more annoying, I guess, we take those and we break them into two broad categories: prime versus conversion. Prime includes direct materials, direct labor. Conversion, direct labor has a leg in each of those definitions. Direct labor is also conversion cost, and our manufacturing overhead is a conversion cost. Okay, when we think about our direct versus indirect, direct costs are easily traced to the product. Indirect cost, we have to what? We have to apply them. There's the obvious ones: indirect labor, indirect materials, and then there's the others, which is the depreciation, rent, utilities, property tax. And this is not an exhaustive list. There are many, many costs that could be difficult to trace to the product. Okay, and so I get to stop my video for a second so I stopped it before to open the blind, and now I'm going to open it again to close. I mean, turn off the camera again to close the blinds because the sun just won't cooperate with me now, will it? Okay, so let me get my video back. Okay, good. I'll probably have to stand up later to open that again. Okay, but anyway, all right. So let's just go ahead and let's take a look at what they say to us now in the outline here. And they start talking about product cost. Okay, so we've seen the visual, and let's just take a look at the next page. Okay, and our product cost, okay, include, as we saw, direct materials, direct labor, and our manufacturing overhead. These could also be called what? Could also be called manufacturing costs. And I'm not asking you to flashcard that because I asked you to flashcard that picture a minute ago, which has that same information. Now we take other costs and we treat them as a period cost. Okay, Now, when we deal with our period cost are not a product cost by definition. You're either a product cost or a period cost. Period costs are expensed in the period in which they are incurred. In other words, period costs don't spend any time on the balance sheet. They go straight to what? Straight to the income statement, don't they? Okay, they are expensed in the period incurred, so they don't sit there as inventory on the balance sheet, I should say. So what happens? Period costs include selling, general, and administrative expenses, as well as, and they talk about interest financing expenses. The difference, though, with the interest financing are considered non-operating, whereas what? Selling and administrative expenses are considered operating. Now, the BEC exam doesn't get that much into the organization of the income statement, but I think it's worth our while to go ahead and just sort of picture, an income statement structure for a second. So I'm just going to co-op this little space down here. The only reason I'm writing it down here is because I have space. And if this is our income statement, IS is income statement, we would have revenue minus what? Cost of goods sold, and that would give us gross profit. Now, what happens? Our cost of goods sold comes from the balance sheet. In other words, when we sell something, we debit cost of goods sold, and we credit what? Finished goods inventory when we sell that thing. So what happens? When we credit finished goods inventory, it comes off of the balance sheet and appears on the income statement of cost of goods sold. We have gross profit, and then we have selling and admin expenses. Okay, those are what? Those are period costs that go straight to the income statement. Okay, and the difference between our gross profit and our selling and admin expenses give us operating income. I guess it could be a loss. Operating income, that says operating income or loss. And then we have non-operating items. That says non-operating. Okay, we have non-operating items. And the non-operating items would include what? Again, I'm going to do another annoying arrow over here. Interest expense, for example. And then after we consider those items, we end up with, and I'm falling off the edge of my income statement here, we end up with what? We end up with our net income. Okay, so for our purposes right here, right now, we have what? We have product costs. Product costs are what? Direct materials, direct labor, manufacturing overhead. They run through the balance sheet to form cost of goods sold. We have period costs. Period costs are our selling and administrative expenses. They are what? They are expensed as incurred. And going back to our, well, you don't have to call me this, you don't have to call me that. These are our period costs, are non-manufacturing costs also. So I'm going to also write another thing over here, non-manufacturing costs. Okay, so I think that this stuff is not that hard once you kind of non-manufacturing costs. That says non-manufacturing costs. Once you start to get comfortable with the different terms that are used to describe the same thing. So you have product costs. Product costs are what? Are direct materials, direct labor, manufacturing overhead. They're also called manufacturing costs. You have period costs. Period costs are selling and administrative costs. They go straight to the income statement. And you could also call them non-manufacturing costs. Okay, question. All right, good. So with that largely definitional discussion, I mean, they put some numbers on it, but it's, can we call out these costs for whether they are period or product costs? So it gets a little hard because they both start with a P. So we'll use product, PRO for product, and PER for period. How about that? Okay, so how about wages for factory employees? Product or period?
Product.
Product.
Good.
Product.
Good. How about wages for the accounting department?
Period.
Good. That's a selling. Accounting is an administrative, right? Cost,
Yes.
right? How about sales and promotion expense?
Period.
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 Good, good. Right. Just using the definition. Raw materials.
Product.
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 Good. General administrative.
Period.
Period.
Good. How about manufacturing overhead?
Product.
Product.
How about interest expense?
Period.
Period. And it is what? It is really not an operating cost, right? But it is a period cost. Okay. Okay, good. And you can see they added those numbers up for us on the next page. Okay, good. Now, tracing costs to cost objects, essentially tracing them to our product. Direct cost, direct materials, direct labor, no brainer. Okay, those are easily traceable. If somebody works and we pay them, you know, $50 an hour and they work for 2 hours on something, we know that the direct labor is what? Is $100 on that, right? Raw materials, the wood used to make a table, we can easily trace the materials that were used to build something like a wooden table, right? Indirect cost, and we have our indirect materials, and indirect materials cannot easily be traceable to the product, okay? And they say could not be traced to the completed product, and then they start using examples like, say, glue to put together a table. There's this this alcohol, I think it's called Louis the 15th or 14th, I forget. It's always at the very top shelf of a bar. It's this big decorative bottle. And every now and then someone who's trying to impress their date or something will order that stuff, and they come up there with the thing that looks like a needle, and they take a little syringe and they sit there and they measure exactly how many ounces of that they gave you, and they charge you some outrageously ridiculous price per ounce. Meanwhile, a shot of Patron would have done you just as well. Okay, but what happens? They sit there and they could, if they wanted to, measure the glue that you put in a table that carefully, but the cost of measuring that, what outweighs the benefit of that better accounting information. So we might treat glue that we use to put together a wooden table as an indirect material. Okay. Indirect labor. When we talk about indirect labor, classic example is what? Something that's not easily traceable. Maybe a supervisor who moves from job to job, who doesn't really spend all their time on any one job. And rather than sitting there and asking them to track their time by job, we just treat them as an indirect labor. Okay. And then the other indirect costs, and I've already given you a listing of some of those, but just remember, we talked about depreciation. Now be careful, depreciation on what? On the factory building. Okay, that's a common trick in a cost and managerial accounting questions, in which they give you depreciation on the administrative offices. That's a period cost. It's depreciation on what? On the factory building that would be a product cost, and thus be counted as an indirect cost or overhead, right? Okay. What else? Rent on a factory building, property taxes. Okay, utilities. Again, all of these would be considered in that category of others. And that one might get a little more challenging simply because they don't have the word indirect in front of them like we do with indirect labor and indirect materials. Okay. Now you come over and we have this pass key, which I've already asked you to flashcard that chart that had all the definitions on one little picture there after I wrote them in and stuff. But our prime costs are direct materials, our direct labor. Conversion cost, again, direct labor appears in both categories, direct labor and manufacturing overhead. Okay, okay, good. Now, out accounting for overhead. And You often see this discussion of allocation base. And what I don't like about the term allocation base, an allocation really is taking a cost and arbitrarily assigning it to different categories. I would rather call this an application base, as you apply the cost to the job as they incur whatever the application base is. Allocation says the cost has been incurred and we're just now going to allocate it between different categories or different accounts. To me, it's more we're applying the cost as they use whatever the application base is, but they often call it the allocation base, and it's basically cost drivers, okay, that are used to apply the indirect cost, okay, and they call them allocation bases. They can also be called, and I think more correctly, application basis. Okay, so when traditional costing is used, and what we're going to look at first here, we're going to see that we have one account called the overhead account and a single application driver that is used. Often you see direct labor hours being used. You could use multiple cost pools and multiple allocation or application bases, and that is activity-based costing. And we'll talk more about that here in a little while. Now, when you look at this, you can see that we have these two steps that they talk about here. And they tell us that we take our budgeted overhead cost and divide that by the estimated cost driver. Both of these numbers, budget is an estimate, isn't it? Is a budget an estimate? Is a budget an estimate?
Yes. Yes.
Yeah.
Yes.
Okay. So we look, and maybe we're doing this, Serena, in March of 2022, because we're trying to come up with our application rate, our predetermined overhead rate. We're trying to come up with it for 2023. So we say, okay, we estimate, we're doing this probably, 6 to 9 months in advance. We're estimating that next year, our total overhead will be this, and next year, our estimated cost driver will be this. So we essentially sit there and let's say we said, well, we think our total overhead, our indirect labor, our indirect materials, our others, our depreciation, we think our total overhead, and it's an estimate, we're doing it, say, 9 months in advance, and we sit there and we say, we think it's going to be $1 million. Okay, and I'm just making these numbers up, obviously. Okay, and then we sit there and say, and we think that a good driver of our overhead cost is direct labor. You see often direct labor being used as the application base, but it really depends on the nature of the industry, what they're doing. I was on an assignment with the GAO one time where Congress was concerned that there weren't enough plants that made an oxidizer that makes solid rocket fuel burn. Now, solid rocket fuel is important. The reason they got concerned about the guy in Korea was when he developed the solid rocket, because the solid rocket fuel is much lighter. Liquid fuel is heavy, so it won't fly to the next continent as well. If you want intercontinental ballistic missiles, you have to have solid rocket fuel. So basically, once he developed that, they got scared of him. Okay, now what happens? Going back, Congress was concerned that there weren't enough plants to produce this oxidizer to make that solid rocket fuel burn, because as you can imagine, it's solid, it's a little harder to burn. You need an oxidizer to make it burn called ammonium perchlorate. There was 2 plants in the whole country that made that, both outside of Las Vegas in a city called Henderson, Nevada. One of them blew up. And as you might imagine, if an oxidizer plant catches on fire, it's kind of hard to put it out. So the thing kept burning and burning, and it finally blew up. So now we were down to 1 plant as a nation to produce all the oxidizer that makes the defense weapons burn and stuff. So Congress asked us to look at that. Now, the reason that the plant was outside Henderson, outside Las Vegas in Henderson, Nevada, is because right there you have Hoover Dam. So you have a cheap supply of electricity, and apparently it takes, all kinds of kilowatt hours to produce this stuff. Okay, that's why Las Vegas is always lit up, by the way, because it's right there outside of Hoover Dam. So electricity costs are fairly cheap. So they say just let it burn, right? So what happens? Not the oxidizer plant, but the lights. Okay, so what happens? In that case, a company like that would probably use kilowatt hours as their driver for their overhead costs. Okay, so the only reason I'm giving you that boring story is so that you realize is it doesn't have to be direct labor hours, even though you see that quite often in accounting questions and whatnot. Okay, but in this particular case, let's say they're using direct labor hours. Okay, and let's say they estimate that they're going to have 100,000 direct labor hours next year. Well, 1,000,000 divided by 100,000, even I think I can figure that one out in my head, is what? $10 per direct labor hour is what they come up with their predetermined overhead rate, and they come with that probably 9 months in advance. And then later in that next year, when they start spending time on a particular job, now they have a way to apply those indirect costs to the job. And so let's say, not a trick question, a job uses what? 5 direct labor hours. Okay, uses 5 direct labor hours. I'm trying to write a 5 there. 5 direct labor hours, and that's the what? That's the actual amount of hours that job used times what? Times that predetermined overhead rate that we came up with probably last year, whatever. 5 direct labor hours times $10 means we would apply what? $50 of overhead cost to that particular job. Question?
Yes, for the payroll, do you encounter like percentage increase? I mean, it's estimate.
Well, if we estimated that we were going to have an increase in salary in the next year, then yeah. I mean, we're trying to get this thing as accurate as possible. So if you're saying, do you consider the fact that you'd be paying more salaries and therefore some of your indirect labor cost, I guess in that case, would be more, then yeah, you would put that in determining this number. Am I misunderstanding your question?
No, that's correct. Thank you.
Yeah, I mean, you do your best to get this number correct. If it is not a perfect number, then we end up with something called over or under applied overhead. And we're going to talk about that. And that is fairly easy to correct. I mean, what I always tell my students that are just starting out into accounting, they think, well, if it's not right, then what are we going to do? And I hold up my pen and I show them with accounting, we can fix anything with a pen. We just make a journal entry to fix it if it's not exactly what it's supposed to be. And we'll talk more about that later. Okay, question.
Yeah, so with your example, I know it's just an example, you put 5 for the actual cost drivers. Typically, it'd probably be a little closer to that 100,000 that you started with. Or
Well, for the entire year, yeah, hopefully, unless we're driving drunk when we make that estimate. I'm using the 5 there because I'm just thinking of just one job.
okay, so the step 2, the actual cost driver is an individual unit. Step 1, it's a total accumulation over the year.
Yeah, I mean, generally you would apply your overhead costs as the work is being completed on these different jobs. Because remember, we're trying to get the cost through from raw materials, direct raw materials, our labor cost, our depreciation and whatnot. And we're trying to get them to work in process, from work in process to finished goods, from finished goods to cost of goods sold. So we want to keep track of the things that we actually sold this period, right? To see what the costs are. So we would do it by job, right? We're not going to take all of our, because some of those costs have to sit on the balance sheet and they may still not be sold by the end of the year, right?
Got it. Okay.
Yeah. So you do it by job.
Okay.
Yeah.
Thank you.
In fact, let me see here. I always debate this, but I think this is the time to do this. Okay, so let's look at, see page 13, which is, I think, that's not the next page. We'll come back to this. We don't need this right now to answer this question. We'll come back to some of these other things. Okay, but what I want to do right here is, yeah, what I say, page 13, guys?
Yes.
Don't worry, you don't need all this to answer this question. Let's look at this question right here. Okay, so I'm going to go ahead and put the poll up for today. And I think you'll see right now with this example, it kind of answers the question too that was Laura, I think, asked. And then you'll kind of get this. It's not that tough. Keep going, guys. I'm going to give you more time with this one because this conceivably could be questioned that during the exam might take you a little longer, maybe about 3 minutes. We're at the 3-minute mark now, but I'm going to assume you're going to get faster at this as you get closer to your exam. So I'll give you a little more time. Okay, guys, that's about 4 minutes. Now I'm going to go ahead end the poll. So try to wrap up your best shot at the answer here. Okay. All right, good. So I'm going to go ahead and end the poll. And we have got okay on this one. This is a little tougher question. Maybe I should have given you a little more time. We're about 60% on the right answer. The answer here is C. Okay. But let's just go ahead and let's take a look at this one. So we look and we have what? We have Jonathan Manufacturing adopted a job costing system. Job costing system is what is used when we're developing, say, unique products. So say we're building a house. House is going to be using job costing because, you know, Bill Gates' house probably costs a little more than mine did, I'm guessing. Okay, so every house is unique, right? For the current year, budgeted cost driver activity levels for direct labor hours and direct labor costs were 20,000 and 100,000 respectively. Okay, now they're telling us what they budgeted for the hours, and they're telling us what they budgeted for the direct labor cost, right? 20,000 for the hours, 100,000 for the cost. Okay, now you keep going. And in addition, budgeted variable, okay, so now they're giving me more budgeted information. Budgeted variable, fixed factory overhead, and fixed and variable were 50,000 for the fixed and 50,000 for the variable and 25,000 for the fixed. So they're telling us their budgeted overhead is what? It's 25,000 plus 50,000. So they're telling us the budgeted overhead is how much? 75,000, aren't they? Variable, fixed, they're telling us it's $75,000. We add them together, that's 75,000 is what they budgeted. And then they start giving us some actual cost for the period, etc. Now, they tell us that for particular 1,500 direct labor hour job were used, and using direct labor hours as the cost driver. So if we're using direct labor hours as the cost driver, then we need to pick up what? We need to pick up the 20,000 direct labor hours that they budgeted. That's the predetermined estimate of the driver. So 75,000 divided by the 20,000 gives me what? What was the number? 375 per direct labor hour. Okay. And if what? If this job used 1,500, again, getting to Laura's question, you apply it typically per job. 1,500 divided by 3.75 is going to give me the correct answer here, 5,625. Okay. Now let me ask let me point out a couple things. Did I need this number? No. 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 I needed this number. I needed what? I needed this. I needed this, and I needed this. All those numbers in this table, and I needed what? 3 of them? 4 of them? Question. Let me ask a different question. Let me ask Andrew. What would happen if they asked me what were the total overhead costs applied for the period? How would I answer that? Andrew?
You asked what would be the cost if it was the total overhead price applied?
What would be the total overhead cost applied for the period? for the year? How would I set that up?
Is it the same setup, but instead of using the 1,500 direct labor hours, we would use 21,000 direct labor hours?
Yeah, right, Stephanie. Yeah, I would sit here and I would do what? I would take the 21,000 and I would multiply that times 3.75. And that would be, and the reason I asked that, I'm trying to get to Laura's question, if they asked the total amount applied, and notice, yeah, that's getting a lot closer to what the estimate was, right? But typically you wouldn't wait till the end of the year to apply the costs, because by then we've got jobs where we've already had to debit cost of goods sold and credit finished goods inventory. So it'd kind of be difficult to do it at the end of the year. So you would do it by job. But there could be a CPA exam question where they sit there and they ask you what's the total that would be applied, and you'd have to pick up that 21,000. That number would be relevant. Okay, good. All right, guys, make sure that you are following along as we go along. The whole point of this class is for you to register for the exam. Get your notice to schedule. Did any updates on notice to schedules and authorizations to test? Okay, that's now officially taking too long. So if you have already applied, you applied near the beginning of the class and you still haven't said anything, you need to get them on the phone and say what's going on, because that's too long now. Because they are advertising, they are putting out there publicly that they're getting these things done in 3 weeks. And if they're not living up to that, then they need to fix their website, or you need to find out what's wrong with your situation. Okay, all right, so keep pushing towards studying for and taking the exam. There are no reasons not to be doing this, guys. Okay, this is not a class, this is not the baby pool. This is the deep end now. This is the, what do they call that? The high dive. Okay, and so it's time to start to focus in on this. Okay, good. Now you come over and you start to look at what they call cost behavior, fixed versus variable. Okay, and you can see that variable cost does what? It goes up as the volume of units go up. Direct materials and direct labor tend to be our variable costs. Okay, and then we have what? We have our total costs, and our total costs are basically the combination of our fixed costs plus our variable costs. So notice you still have the variable component. The fixed stays the same. I'm going to highlight that so better look. The fixed stay the same regardless of the number of units that you produce. Okay. Now, when we look at our fixed cost, by the way, even though I'm saying direct material and direct labor tend to be variable costs, it's important to note that non-manufacturing costs can also be what? Can also be variable versus fixed. Okay. For example, sales commission. Sales commission is what? Is a selling and administrative cost, but it's variable because we pay commission as we sell something, right? Okay. When we think about our fixed cost, okay, our fixed costs are often, okay, our manufacturing overhead items. For example, the depreciation on the factory building stays the same regardless of the number of units that you produce, right? However, non-manufacturing costs can also be fixed. For example, the CEO salary, which is administrative cost, is also fixed, isn't it? Okay, so even though we tend to talk about, when I've written on the page here, we tend to think of these a little too much, I think, sometimes towards manufacturing costs. Non-manufacturing costs can also behave in the same way. Okay, now when you look at this function right here, this could be written as y equals mx plus b. Okay, where y is the what? Is the total function. M is the slope of this variable line. So what, for every movement this way, we get so much movement that way. They call that the slope. And B is what? The fixed portion. Okay, now look, we're using this to understand our cost behavior. So total cost is equal to what? Is equal to variable cost times what? Times the number of units plus fixed costs. Now, when you have a function like that, where you can write an equation out to describe something, now you can use various tools that we'll talk about in chapter 4 to predict our cost. For example, you could use regression analysis to sit there and predict how our costs are going to behave. And that is how you would end up coming with that predetermined overhead rate that we're talking about, because you would use data points probably from previous years. And yes, Serena, you might address them for, you know, different assumptions that you're saying, well, we're going to have an increase in salary, so we'll throw that into the equation. But you can sit there and predict your costs. And once you do that, you can come up with that predetermined overhead rate. Okay, now that's not what we're doing today, but I'm just pointing forward to understanding the way these costs behave are relevant or important towards being able to predict these overhead costs going forward. Okay, now you take a look and we have our variable costs. Okay, and our variable costs, as we know, change with the level of production. Okay, but this part, I don't know why the CPA exam thinks this is so interesting. I guess they think that, you know, they can kind of mess you up by writing you a question like this. So we're going to flashcard this material right here. Okay, variable costs change in total. Produce more units, variable costs go up, but they remain constant per unit. So if our variable costs are $5 per unit, no matter how many units we produce, it's going to be $5 per unit. You produce 1 unit, $5. You produce 2 units, the total goes up to 10, but the cost per unit stays the same, doesn't it? Okay. Now, so as production volume increases or decreases, the variable cost will increase or decrease, but the variable cost per unit will always remain the same. Flashcard that. I don't know why the exam thinks that's so interesting, and they like to try to mess you up with that stupid little thing. I mean, to me, it sounds like something you would be saying to, you know, tease your younger brother, younger sister. You'd say, well, variable costs are, you know, variable per unit, but fixed in total. You know, I mean, are fixed per unit, but variable in total. See, now even I'm messing it. You know, Mom, he's doing it again. Okay, sounds like you're sitting there and contradicting yourself, right? Okay, now when you look at our fixed cost, okay, fixed costs remain constant in total, but they vary per unit. So as production volume changes, increases or decreases, fixed costs remain the same, but the cost per unit will increase or decrease respectively. And let's go ahead and flashcard that, but let's just use a simple little example. Let's say my fixed costs, FC there stands for flashcard. Let's say my fixed costs are what, 100,000, and I produce 1 unit. What are my fixed costs per unit? Not a trick question. 100,000. Okay, let's say I produce, fixed costs are going to remain the same in total. Let's say I produce 2 units. Now what's my fixed cost per unit? Not a trick question.
100,000.
50,000, good. Okay, you know, just to go one more on a very obvious point here, understand 100,000, 3 units. Now my what, fixed cost per unit are 33 cents, whatever. Okay, so they changed as the number of units produced on a per unit basis, even though the total stayed the same, right? Okay, okay, good. Now you come over and they tell us that some costs are semi-variable. They call them mixed costs. Okay, so what they're saying to you is, hey, look, we have a fixed cost component and we have a variable cost component, and they are describing, for the most part, the way many manufacturing overhead costs behave. Okay, for example, take the utility bill on our factory building. Okay, what happens if you sit there and you don't use any electricity? You turn off all the, there's a big switch on your on the panel for your electricity in your house, and if you flip this one big switch at the top, everything goes off. Let's say you flip that switch and you sit in your house for a month. You don't shower, you don't do anything, you don't move for a month. What will your utility bill be for your PG&E? Zero?
Oh, yeah, 0. No.
No, they'll still send you a bill saying, give us $20 or whatever it is, because there's a fixed charge just for the right to have the wire run into your house. Now, as you now start turning everything back on, now there'll be a variable component as you use up kilowatt hours, right? So if we wanted to, we could graph out our utility bill like this, the fixed component and the variable component. And so when you think of manufacturing overhead, some manufacturing overhead are fixed, like our depreciation. Some manufacturing overhead tend to be what? Tend to be mixed. Like I mentioned, utility bill tends to be manufacturing overhead. So if you took your total of all your manufacturing overhead, it probably does look something like this, doesn't it? Thus, you can use regression analysis, et cetera, to predict what your overhead costs are going to be. And when you use regression analysis, the nice thing about it is, if there isn't a good cause and effect between the driver and the cost, you get a reading out that tells you step away from the analysis. This is not something that's behaving linearly. It is not a good cost predictor, and you stop there and you find some other driver to predict whatever the cost is that you're trying to allocate appropriately. Okay. Okay, good. Question? All right, now when we come over and take a look, guys, and I apologize that I skipped past that first, but long run characteristics. In the long run, all costs are considered variable. Just flashcard that, okay? And they call that in the relevant range. For example, I'm saying that depreciation on the factory building, rent on the factory building is a fixed cost. But if you produce so many units that you're going to meet or exceed the factory capacity, what are you going to do? You're going to have to add another factory. And so that rent or depreciation on the factory building is no longer fixed. Now it's become variable, right? So when we're talking in the relevant range, then the relevant range of whatever we're producing in that one factory. You get outside another, you add another factory, now even a fixed cost like depreciation becomes variable. Okay. Okay, good. I'm not going to get into this exercise here, guys. It's a little too cumbersome for us to go through and categorize costs by variable versus fixed. Okay. But let's take a look at a couple of the semi-variable ones. Okay, so we've got this 200,000 semi-variable for indirect labor, and then we've got maintenance and repair they're treating as semi-variable. Now the problem that I have is I feel like they're kind of I don't know, I think they're being a little bit inaccurate in describing these as semi-variable. I would more likely put these in the category of a step cost as opposed to a true semi-variable. Okay, to me, the utility bill is a true semi-variable and that it has variable and fixed component to it. Step cost says, hey, for so many units, it's fixed, and then if I increase the number of units, it goes up, but it stays there for another number of units, and then it goes up again. That's why they call it a step. See the steps, okay? For example, indirect labor. hey, I have a supervisor when I only have 5 employees, but I need to add a second supervisor if I have to add employees now because my production level has gone up to a level that makes me start adding more employees. I then get to another level where I have to add more employees. Then I'm going to step those indirect costs, the supervisor cost, up a little bit more. So I would call it more a step cost than a semi-variable. Okay. Again, they're calling them semi-variable. Let's see if we have any agreement here. Indirect labor, again, I think it's more of a step cost, but okay. Fringe benefits, okay. I think it's also, again, more of a step cost. Maintenance and repairs seem like a step cost to me, okay. Okay, they're calling the electricity. See, this is what pisses me off. Well, if it's variable and fixed, why isn't it semi-variable? So I'm not sure what they're trying to tell us here. So take a look at this. I tend to look at them as stepped versus they're calling them semi-variable. But take a look at some of these questions. I think you'll get used to how they work these. And then again, as I've mentioned, my selling and administrative expenses can work in a similar manner.
It almost seems like they're categorizing them based on use. So for example, electricity is always used, therefore it's fixed. But we disagree because it's a non-fixed cost. It's an inconsistent charge, right?
No, I wouldn't go by, no, I would throw that out completely. I'm not sure you said that, but I would throw that notion out completely. It's not because it's always used that makes it fixed. It's that it has an amount per period that's going to be charged regardless of production. That's what makes it fixed, not because it's always
So
used.
that's their argument. Okay.
Well, I just, to me, so if what they're saying to me is, you know, indirect labor is semi-variable, then somebody please describe to me what a stepped cost is. And I know these terms are not synonymous.
Got it.
So I feel like they've kind of, I almost said they've kind of shit the bed on this a little bit, but I didn't want to say that, so I didn't. But it just seems to me that they kind of they kind of missed the mark on this a little bit. Okay,
I
I
understand.
would call it more of a stepped cost than a semi-variable, and I would call utilities more semi-variable because it has and that's what this picture is describing. Because notice the total cost line moves as production goes up, but there's still that fixed part pushing up that whole total cost line, right? So the picture they showed is describing what I'm describing for the utility bill. So I just feel like they should have, you know, more had a category here for step cost, which tend to do this thing.
I totally agree. I was just trying to understand their logic so that I don't miss a question on the exam. That's all.
Right. No, yeah, I don't even think they meant that. I just think they swung and missed a little bit on this chart. Yeah, is what I was trying to say. But what you could do with this is flashcard this, shrink to fit and flashcard it. It's still helpful now that we've had this discussion to kind of maybe you know, can kind of get a feel for where these might go. I think this stuff is so easy though that you guys aren't gonna have any problem with it. Okay, so let's just go ahead and let's take a look at this question. I think you'll see what I mean. And when I say things are easy, guys, I'm not trying to, I'm actually trying to compliment you, not insult you. You know, and that with the requisite amount of time that I know you're going to spend on this, this will be a stronger area for you. Is probably a better way for me to put that on the exam. Okay, good. Let's take a look at this one, guys. I'm going to go ahead and end the poll. And this again is one of those, and everyone got this right. So good job in dealing with the different names to describe the same thing, right? Okay, so if we're dealing with electricity tends to be what? An overhead cost, and overhead costs are what? Direct, are considered conversion costs. Even though direct labor is also conversion costs, overhead only falls into the conversion cost category. Good. Okay. Let's see. What makes sense? I'm thinking it makes sense for us to go ahead and take the break right now, because we won't be able to complete this module without taking the break. Anyway, we're going to take the break now. I don't need to explain it, right? So I'm thinking we're going to come back here at 6:20. Okay, and we will pick up this second module. I'm going to pause the recording. Somebody please remind me to restart it when we come back. And we're going to go ahead now and jump into module 2. And as we look at module 2, I think it's helpful to have as a visual this set of T accounts that you see on page 14. Okay, so let's just go ahead and let's take a look at some of these, because again, I feel half the battle on some of this is just making sure we understand the terminology and how they use different terms to basically describe the same thing. Okay, so let's just go through this, and I think it helps to start out with the raw materials. Okay, and so we have raw materials, and of course, when we purchase raw materials, we will debit the raw materials. Okay, and credit, say, accounts payable, right? Because we're buying those raw materials, we have to pay for them. We could credit cash, credit accounts payable. Okay, now as we use raw materials, of course, we credit raw materials. So even though they're kind of showing the line coming from the debit side, which is a little bit daunting here for the indirect materials anyway, but for the direct materials, we go ahead and credit the raw materials. We debit the work in progress. Okay, for our indirect materials, we're going to go ahead and we're going to credit the raw materials. Okay, and you just follow this line down, and we will debit manufacturing overhead, because remember, we can't trace indirect materials directly to the work in progress. So we're going to go ahead and we're going to put that into our manufacturing overhead account. Okay, and we put it on the actual side. We will apply it to jobs by crediting that using that predetermined overhead rate. Okay, now you come over and we have our wages payable. Okay, and if it's direct labor, then we go ahead and we debit our work in progress for whatever our direct labor is. And for our indirect labor, and they kept this neatly on the credit side, we will go to our manufacturing overhead account on the actual side and put in our labor. Okay, so we've got our direct material, we've got our direct labor. Now, we also have to consider our other manufacturing costs, which is our overhead. And notice, guys, we've got our direct material, we've got our direct labor sitting there, our indirect materials, our indirect labor sitting there. But then we have what I call the others, right? All these different things, and I just put them in the category of others that tend to be indirect. Now, just to make sure we're understanding a little bit where the credits are coming from, if we're debiting our manufacturing overhead for, say, our depreciation, Okay, let's just think about the depreciation, for example. That's the debit to our manufacturing overhead. What's the credit to? If we debited manufacturing overhead, what did we credit? Debits equal credits. Are you saying some stuff? And I think you're on mute. So
I know, because I'm not sure.
oh, okay. We have to credit accumulated depreciation. You know, if this is a retail entity, we would debit depreciation expense, right? But for a manufacturer, the depreciation on our factory building gets what? Debited to the manufacturing overhead because we're going to apply it to jobs, right? If we're debiting our you know, property taxes to manufacturing overhead, what are we crediting? Serena?
Yeah, tax expense, property tax expense.
No, why would you
No.
credit tax expense?
Oh, debit.
Expenses is increased by debit.
Taxes payable?
Taxes payable or cash, right? Okay, let's just say taxes payable to keep it, you know, clear that it's the taxes. Okay, good. So again, I'm pointing out that there would be these credits, utilities payable, whatever, and the debit, instead of going to expense like what we're used to in a retail entity for a manufacturer, it's going to manufacturing overhead, right? Okay. Now, keep in mind that we could also have the CEO salary that we credit to salaries payable, but now the what? The debit is going to go where? If we credit CEO's salary, excuse me, wages payable for the CEO's salary, where's the credit? Where's the debit going?
Expense, salary expense.
Good. Now it's salary expense because the CEO's salary is a period expense, right? Okay. Okay, good. Okay, so once we have these costs that have been put into either work in progress or manufacturing overhead, then we go ahead and we do what? We apply the manufacturing overhead. We apply it. Use highlighter for that. We apply it to our work in progress. So now we have what? Now we have our direct labor, our direct materials, our manufacturing overhead. These are called what? Called manufacturing costs. Flashcard that. That's called manufacturing costs. So we have these sitting in our work in progress. And if something is still in progress, is it finished? No, if it's in progress, it's not finished. But once it is finished, we will credit our work in progress and debit our finished goods inventory. Another important definition, guys, the term cost of goods manufactured by definition is the amount that we debit to finished goods and we credit to what? To work in process. That amount, the amount that we subtract out of work in progress and add into finished goods, is called the cost of goods manufactured. Flashcard that. Then when we sell something, and now we're just back to a very basic, you know, financial accounting discussion. When we sell something, what do? We debit cost of goods sold, we credit inventory, don't we? In this case, it so happened to be finished goods inventory. Okay, so if we were to prepare and notice, guys, quickly before I go to that next point about the income statement, raw materials, work in progress, finished goods are all reported on which financial statement? Balance sheet is an asset, right? Okay, in the period in which we sell the thing, when we finally sell it, then what? Then when we prepare our income statement will show what? Will show sales, whatever, right? Net sales, whatever, minus cost of goods sold. That number right there, okay? And that will what? Give me gross profit. And then I'm going to report my selling and admin. For example, what? My CEO salary expense in the period in which it's incurred. Okay. Okay, good. Now, we would probably not have had a perfect estimate of what our predetermined overhead rate should be. And so there will always be an under or over applied overhead. We're going to deal with that in another lecture. Don't worry about that right now. Okay. Question. Okay, good. Now going back a little bit to a couple things that we kind of jumped past. Okay. Cost of goods manufactured. I already asked you to flashcard it, okay, on that chart, but just flashcard it again. Cost of goods manufactured is the debit to finished goods and the credit to what? Work in process. By definition, it is what we have taken out of work in process and put into finished goods. Just, you got to know that definition cold like that, because they ask, they'll give you some numbers and they'll say, what is the cost of goods manufactured? And right in front of you, they're showing you the amount that they took out of work in process and put in finished goods, and they give you all this other stuff. And you're going to sit there scrambling around trying to figure out what is the cost of goods manufactured? They're showing you the debit to finished goods and the credit to work in process. Okay. Okay, good. Now you come over and now I'm going to show you something else. I'm going to go past that. And I just want to go to job order costing. I'm going to show you something else, which to me is much more useful for you than, well, no, okay, as he argues with himself. Okay, I'm going to do it this way. I'll do it this way. And then I'm going to show you where you can flashcard this later. Okay, so they show us how to calculate the cost of goods manufactured, which is the beginning work in process, add direct materials used, okay, and our direct labor and our manufacturing overhead. Notice these three numbers are our manufacturing cost, which I asked you to flashcard that definition, right? And so we have total manufacturing cost available. We take out the work in process, and that ending work in process, and that difference is the cost of goods manufactured. Now, the reason I'm sitting here struggling with myself is, do I want to show it to you here like this? I think it's easier to remember if you think of the flow of those T accounts that we were looking at. So I like to use for these things, and Becker came up with this mnemonic, and the mnemonic is BASE, B-A-S-E, okay? And let's just say that we're analyzing the work in process account. Okay, if we're analyzing the work in process account, this to me works more with the way they ask questions, and it's just easier to remember the flow of the journal entries, right? So if we're analyzing work in process and our goal is to come up with the cost of goods manufactured, then our goal is to find this subtract, isn't it? I mean, if they're going to ask me the cost of goods manufactured, by definition, the cost of goods manufactured is the amounts that I take out of work in process and put into finished goods, right? Right? It's the credit. It's the amount that I take out of work in process. So if I have a problem and they're asking me to calculate the cost of goods manufactured, then they would have to give me the beginning work in process. they would have to, and they might call it out as the total manufacturing cost, or they might call it out by element of manufacturing costs, which you know is my direct labor, my direct material, my manufacturing overhead. I'm just going to go with the total. The total here is 120,000, right? That's what they added for the period. Okay. Now, I always like to give myself a little subtotal in there. And my subtotal is 160,000, isn't it? Okay, so I have 160,000. And then the problem, if it's asking me to calculate the cost of goods manufactured, then it's going to have to do what? Give me the ending inventory, isn't it? Okay, so I would sit there and I'd say, well, the ending inventory, they tell me, and you know, I'm just kind of assuming in a problem, they would tell me is 10,000. Then what must have been the subtract? And then I always go over, because you know I'm not good at math, and so I use my calculator to do a little side calculation. 160,000 minus 10,000 with my calculator means that we must have what? We must have subtracted 150,000 from my work in process to end up with 10,000 ending inventory. And by definition, what I subtract from my work in process is my cost of goods manufactured, right? By definition. Question? Okay, good. Now, cost of goods sold, to me, guys, is, you know, again, the way they're showing you the calculation, to me, if they were asking me what the cost of goods sold was, I know that cost of goods sold, I can get there by analyzing finished goods. So where do I want to write that? I think I got enough space down here. I mean, let's do a similar sort of thing. Finished goods, beginning, add, subtract, ending. Okay, that's an A for add, B-A-S-E. Beginning, they're telling me here, is 20,000. I add what? I add the cost of goods manufactured. And they could give you a question in which they first make you do this up here, and then maybe ask you what? Then maybe ask you the cost of goods sold, right? By telling you the beginning. You would have figured out the add already. So now my subtotal is what? Subtotal is 170,000. Then they would probably tell me that the ending finished goods inventory is what? Is 50,000. So it's my job to figure out the subtract, and the subtract by definition is what? Cost of goods sold. I always like to do my little side calculation. 170 minus the 50,000 means that there was a subtract of 120,000 to get to that ending inventory of 50. That subtract by definition is what comes out of finished goods, which by definition is cost of goods sold, right? The subtract out of finished goods inventory is the credit. The credit goes to finished goods. That's debit, is cost of goods sold, right? Okay, so I find that more useful than the way they've laid it out here, because you don't have to memorize some formula that they're giving you here. You just have to think of those T counts. What went out, went in, and you can analyze any of these accounts just by remembering, hey, I'm going to start with the beginning. What are the adds? What are the subtracts? What is the ending balance? And then you turn a problem like that into a fill in the blank. Okay, question. Okay, now what we are going to talk about first is a job order costing system, okay? And job order costing is basically used when there are relatively few units are produced in which each unit is unique. Classic example would be, you know, a house. If they use the word custom cabinets, you know, you're building it to order, right? Okay, then you use job order costing. All right, good. So we've already looked at question 1 here. We've looked at our diagram already. So let's just come over and let's talk about process costing. Now, process costing is used when you have essentially homogeneous units that you're producing. In other words, every single unit is the same, okay? And so if that's the case, then we're going to use process costing and we'll track our cost by department. So what happens? You have cornflakes. Every box of cornflakes is the same. Sometimes people say, well, wait a minute, what about my favorite frosted flakes, you know, Tony the Tiger and all that? Well, that's a different batch, okay? But every box of regular cornflakes is exactly the same. So for that, you'd use process costing. And you would have 2 departments. You'd have what? You'd have the flake department and the box department. In the flake department, they have direct material, direct labor, manufacturing overhead to make all the flakes. But you know, people just won't come and buy flakes if you throw them on the ground. And so what happens? They need to be put in a box with a picture of a rooster on them. So you have the box department in which they sit there and they use the cardboard and the paint to paint the rooster and a guy to fold the boxes and put that little wax paper on the inside, right? So you got direct material, direct labor. You don't expect the person to do it in the dark. So they got some sort of, you know, lights for the overhead, whatever, right? So both the flake department and the boxing department have incurred direct labor, direct materials, and manufacturing overhead. Then the flakes get transferred what? From the flake department to the box department. And so now we have what? Now in the final processing department, we have finished goods, don't we? And we transfer them out of the work in process in that final department into finished goods, okay? And that's how we track our costs. We track them by department, okay? Now, you come over and I don't see that this is only relevant to process costing, so I probably should have started here with a better, for better segue and flow. So this formulas, these account analysis that they're showing you could be what could be used in, as we've already seen, job order costing as well, okay? But notice what they do: beginning, add, subtract, ending, right? Okay. For the work in process, beginning, add what? Add my manufacturing cost. That's my manufacturing cost. I'm just going to abbreviate that, man cost. Okay, manufacturing cost, raw materials, direct labor, overhead. Then what? Then I have my work in process available, subtract the ending. Oh no, they didn't, they didn't do it in base order, did they? So maybe this isn't as good as I thought it was. When I looked at it earlier, guys, I thought they went in base order. So don't flashcard this. Remember the base. This doesn't go in base order. The base order is what I showed you in those 2 little examples I gave you for work in process and finished goods. They're coming up with the ending. I don't want to calculate the ending. I want to do it in base order. Beginning, add, then what? Then I go ahead and I, well, yeah, that's base order. God damn it, John. Flashcard it. That is base order. BASE. Add what? Subtract the amount that was transferred, which by definition is what? What is this by definition? Anybody following me? I'm not asking you because I don't know. What is this number? What do we define this number as? Inventory transfer to finished goods out of work in process?
Cost of goods manufactured.
Huh?
Cost of goods manufactured.
Good. Cost of goods manufactured, right? Okay. Cost of goods manufactured. Thank you. Okay. So we have what? We have BAS, which is probably more likely what they're going to ask you to calculate, E. Okay. Now they could ask you for the A here because that's the same number, right? You can see the arrow pointing up there, BASE, or they could ask you what? the cost of goods sold, which is a subtract. So yes, flashcard this, I think that's infinitely more helpful than the way they showed it on that previous page. Okay, now back to our regularly scheduled program, which was to talk about our process costing, okay? And so let's just come over and let's talk about this concept of equivalent units, okay? Now, what happens? Because in a process costing system, you have stuff that is maybe sitting in work in process and it's partially completed and it's still, you know, mixed up as dough or something at the end of the year. They give us credit for any work that we have done up until that date. And we're going to turn that into an equivalent unit as though it was actually a finished unit, okay? Now, the actual calculation of the equivalent unit is very simple. If they told you that there were units that were 75% done, and they say that there's 10,000 units, and they tell us that the 10,000 units were, say, 75% done, then that would have 7,500 equivalent units. And the way they would get to that is to take the 10,000. There's the 75% times the what? 75%. And that's how they would come up with the 7,500. So the actual calculation of the equivalent units is pretty straightforward, pretty easy, okay? What makes this, and admittedly, I'm going to say it is a little bit, I wouldn't say it's hard, it's just cumbersome, the way you have to go through these different cost flow assumptions, okay, is average or FIFO, okay, weighted average or FIFO. And what I find more difficult is keeping them both in my mind at the same time. It seems like every time I use one, I forget how to use the other. Then when I use the other, I forget how to use the first one. Okay, so for you on your exam, you're going to have to keep them both in your mind at the same time. That means what? Flashcards on the process. Okay, but where it makes this a little bit more difficult is you say, oh, okay, beautiful, flashcard. I'll just memorize a flashcard and I always know what to do. But then the problems and the way they describe the things are not always consistent with the way you might have flashcarded. And so it also, so it's not only a running thing where you can keep practicing and practicing the same thing and get better and better. It's also a weightlifting thing that you're going to have to get stronger at how you deal with some of the different things that might come up on these questions, if I may use a sports analogy. Okay, so let's just go ahead and let's take a look at the calculations. And first we're going to look at first in, first out. Okay, and they say that the equivalent units are composed of 3 elements. Okay, completion of units on hand at the beginning of the period, units started and completed during the period, which they tell us units completed minus the beginning work in process, and then units partially completed at the end of the period. Okay, now the cost component is fairly straightforward in that it's only the cost incurred for the period. And I'm going to have you flashcard that here in a little while. Okay, when we use weighted average, okay, for weighted average, the equivalent units are composed of 2 elements: units completed during the month, which is beginning work in process, plus units completed and started during the month, assuming the problem feeds you the information that way. They don't always feed you the information that way, and so it gets a little more complicated than that. And then units partially completed at the end of the period, and there's really no difference between FIFO and weighted average for that. Okay, now the cost components are cost included both in the beginning inventory and current cost, and so that's pretty different from the FIFO method. Okay, so let's first look at the equivalent units in this example under the 2 methods. Okay, and so let's first look at, what is it, weighted average first. Okay, and so what do? They say work in process beginning is 100,000 or 100 units, and they say it's 25% complete. Now, when you're dealing with weighted average, You ignore that. Ignore that. Let me not strike it out because we're going to need it for FIFO. For weighted average, let's just write in exactly what that X was supposed to mean. Ignore for weighted average. You ignore that percentage. Ignore that percentage for weighted average. And I'm speaking specifically about that percentage. Ignore, that says ignore for weighted average. Okay, so they tell us units completed and transferred out. And when they articulate it that way, that means that they completed those units that were sitting in beginning inventory, and they must have started another 500 and completed them, right? Okay, so they tell us that units completed and transferred out were 600. And then, yes, you do apply the 40% here that they tell us for the work in process ending inventory. You don't ignore that. On an equivalent unit basis, that's only 80,000 units. And so the equivalent units for weighted average is 680. Okay. Now, what would you do if the question said to you, well, let me put it this way. There's another way to do this. Okay. If they call this units completed and transferred out, you could do this another way. Okay. You could sit here and say, well, look, I'm going to give myself 100% credit for the beginning inventory. You always do that. You always do that under weighted average. Then I'm going to units completed and transferred out, but I already accounted for the units that I completed from the beginning inventory. So you could also sit here and say, well, 600 minus the 100 I already accounted for is 500. And then you do the same thing for the ending inventory. The 200 times the 40% gives me the 80. And you can come to the same answer that way. Okay, so a couple of different ways of looking at this. And the reason I'm pointing this out is sometimes the question will tell you the units that have been completed, and you need to sit there and they may not, and then you're gonna have to sit there and know that you have to adjust for the beginning inventory, which you already put in there at 100%. Okay. Okay, good. Now, when we come over to the FIFO method, notice they tell us the units were 25% complete as of the end of the period, right? So that means that this period we would have done what? We would have finished those units, but we would have done 75% of the work this period to complete them. Then you have what? Units started and completed, and you have the 600, but since you sat there and you already accounted for what you had done with those 100 units through this equivalent unit calculation, you have to subtract those out to get the 500. So the way I showed you was a way of being consistent between the two methods. When I showed you that thing with FIFO, where the difference was that you gave yourself credit for the 100% of the work done on those 100 units under weighted average under FIFO, only for the amount of work you did. And then you sit there, and for the ending inventory, you sit there and you give yourself, you do it exactly the same way, give yourself credit for the work that you did this period. Okay, question. All right, good. So they give us a pass key here, but I'm a little afraid of the pass key. I want to tell you to flashcard it, but then the other part of me says no, because it really depends largely on how the question is written. And so I'm not sure that a flashcard is safe here. So we're not going to do it. Okay. I want you to learn from the problems, guys. I want you to practice with this and become good at this. I don't want to flashcard it. Okay. This you can flashcard because this is pretty easy and you just got to do it. For the weighted average, because we're saying we did all the work this period on the beginning inventory, we take the cost of beginning inventory and put it in the numerator plus the current cost divided by the equivalent units, which you practice with the calculations there. For FIFO, it's current cost only divided by the equivalent units. Okay, so now we look at the example here, okay? And notice we have these different things, and we have the materials. First thing to take away from this, materials are 100% complete at the beginning of the period. So there will be no equivalent unit calculations for our materials, okay? For our conversion, our beginning inventory was what? Conversion is what? Direct labor and manufacturing overhead are our conversion costs. So for those, we were 40% complete as of May 1st, and we were 80% complete for our ending. So for the beginning, right, we were 40% complete. For the ending, we were 80% complete. Not for our materials, just for our conversion costs. Now, let me ask you a question. If we were 40% complete as of May 1st, how much work do we have to do on these in May? What's the amount of work done in May?
60.
Good, right? 60%, 60%, I said, is the work done in May on my conversion costs. I do nothing on materials in May because they were already 100% complete at the beginning of the period, right? And some processes are like that. The materials go in first, your conversion costs come later, okay? And then they go ahead and they give me the cost associated with all of this for my materials and my conversion costs, okay? All right, good. Now you come over and we start to do our equivalent unit calculations. And so there's the things they want us to do. And let's go ahead. I'm going to do weighted average first, and then I'll do the FIFO, okay? So what happens? For the materials, we say what? Well, we did the materials and we're saying that they were 100% complete, but under weighted average. We give ourselves credit for as though we did all of that work this period. Okay, units started and completed are 10,000. We finished those, and then units that were in process, we give ourselves credit for all of that. And so that's what? That's 16,000 for materials. For conversion cost, again, we give ourselves credit for everything that was done in a previous period. Frankly, we give ourselves credit for having done it this period. The units started and completed are 100%, obviously. And for the what? For the conversion costs, we're only going to give ourselves credit for the 80%. So we have to take the 2,000 times the 80%. That gives us what? That gives us the 1,600 over here, right? For the 80% there. Okay. Okay, good. Now we come over and notice that we do what? We come over and we multiply that times the 1,600 units is the 2,000 in process times the 80%. That gets a little hard to see because they're using that 2,000 one time for both of those numbers. For the 100%, it's 2,000, and for the materials, for the conversion, excuse me, it's 1,600. Okay. Then what we do is we take the cost, and notice we take both the beginning cost and the cost added for the period, and we go ahead and we do the division now. So this is going to be what? 52,000 divided by the 15,600, right? 52,000 divided by that 15,600 gives us this 333 for conversion cost per unit. And the 16,000 divided by the 25,000 gives us this $1.56. So we go ahead and I'll just put in the divide by 16,000 in there rather than draw the arrow. I'll just divide by that 16,000. And that's where they get this 156. That's where that number came from. Okay, all right, good. Now, just to make sure we're understanding what the hell we're doing here, I just want to focus on this $1.56 for the materials, okay? We would do the same thing for the conversion cost, but remember what we're trying to figure out is what on an equivalent unit basis have we completed for the period. So if we're sitting here and we tried to tee this up, we'd have work in process, and I'm just going to focus on the materials, and my beginning balance in my work in process, they tell me in the problem, and I'm just focusing on materials, they tell me the cost for the materials. I'm not going to worry about the 24,000 for the conversion costs. I'm just worrying about about the 3,000 for conversion cost. I'm just worrying about the materials, right? It was 1,000. So they're saying the beginning was 1,000. That's where that number came from. Okay. Then they tell me that they did what? They added, and I'm just focusing on materials, 24,000 for materials for the period, didn't they? So the balance in here now is how much? 25,000. But I'm trying to use this equivalent unit calculation to figure out how much should go to my what? Should go to my finished goods and out of my work in process, right? So what you would do is you would take that 1.56, and again, I'm just focusing on the materials, and you take the 1.56 and you multiply it, and you have to say, well, how many units got transferred out? And the answer is what? The answer is going to be what, these 14,000 worth of materials. Even though there was 16,000 totally produced, they only transferred out what? 14,000, because there was 2,000 that were left still in work in process. So they transferred out 14,000. So you pick up that 14,000, $1.56 times 14,000. Okay. And $1.56 times 14,000 comes to 21,875. Okay. So there would have been what? There would have been a credit to work in process. The reason we're doing this whole thing of 21,875. Just posting that credit, 21,000. Leaving a balance of 3,125. Okay. And we would have debited what? Finished goods. And again, I'm just focusing on the materials here. 21,875. I'm just showing you the reason we're doing this, the reason we're coming up with these equivalent units. Now, you can check this ending inventory number by saying, hey, 2,000. And on an equivalent unit basis, we have assigned a cost of what? $1.56 for the materials. So of those 2,000 that are left there, 2,000, that's 2,000, right? Because we produced a total of 16, but we only transferred out 14 because we had 2,000 still in work in process, times what? Times $1, whatever, 56 was that number down there, gives me that what? That 3,125. So the figure actually checks that that's what gets left. So the ending balance in the work in process, you might get a question and say, well, what would be the ending balance in work in process? And would be those 2,000 units times the equivalent cost per unit, cost per unit on equivalent unit basis. But it kind of, in reality, comes along for the ride, doesn't it? After you figure out what the costs are that were transferred out. Okay. Now for our FIFO, we don't give ourselves any credit for the materials because we did what? We did all that work in another period. We give ourselves credit for what we did this period and what was in progress at the end of the period for materials. For labor, we're only going to give ourselves credit for what? 60% of that, right? Okay. For conversion, labor, and overhead. All the work we completed this period, and then there's no difference between the weighted average and first in, first out for the ending inventory. We do that exactly the same. Okay. Now we're going to come back to spoilage shrinkage here in a little while. I want to first ask if there are any questions, and then I want to go to the problems that, so we apply them to these concepts to problems right away. Okay, let's go ahead then and let's just jump over. We'll come back to some of this other stuff here, but let's just go ahead and do these couple of equivalent unit questions. And then I think we'll also, we'll also do question 2, because we've already studied that stuff. So let's do these 2 equivalent unit questions. We'll come back to question 2, and then I'm going to talk to you a little bit about the spoilage discussion that's up there. Okay, but let's go ahead and let's do this question 2 right now. I'm not question 2, guys. I'm sorry. Stop question 2. Question 3. Sorry. I want to do question 3 right now. Okay, we're on 3 minutes. I'm going to give you another minute on this one because I know this is a little bit tough here in the early when you're first seeing this stuff. Not that you haven't seen this before. You've probably seen it before when you're first reviewing it. Okay, guys, we're on 4 minutes. I'll give you 10 more seconds, which would put us at 4:15. Okay, we're gonna go ahead. So take your best shot. And we're gonna take a look at this one. And yeah, this stuff gets a little bit tough. I would have hoped we would stay a little higher than 53%. They got it right, but let's just go ahead and take a look at this question. Okay, and the correct answer here is B. Okay, but first off, it's important that we know the method, right? It's FIFO. So that means that we're going to only give ourselves credit for work we actually did this period, right? Okay. Now they tell me that we were 50% complete for materials. They give me a percent for the work in process. Inventory was 75% complete for direct materials, and so they want to know what is the equivalent units for the materials. So we have to use both of these percentages when we're using the FIFO method. Now, the way I look at these questions, and again, there might be a couple different ways, but I've said, okay, if for the beginning work in process, I know I'm going to take 100% of that, right? Then I just put those down, 100. I know I got to count those because I'm saying I did all this work this period, and so I put it down. Okay. Then what? Then I'm sorry, wrong method. See what I'm talking about? I always have trouble keeping the two methods in my mind at the same time. It's FIFO. So I'm only giving myself credit for what I do this period. I slipped into weighted average, didn't I? Okay. So I have to say what? 100 units for the beginning, 100 units, but how much work was done? 50% last period, so I do 50% this period, right? So I have to go ahead and multiply that times 0.5. That gives me what? 50 equivalent units, okay? This is my problem, guys. I always, and this is what you're younger than me, so you probably won't have this problem. I always slip into the other method. I have trouble remembering what method I'm using, okay? Now, they tell me that they started during the period and they started 500 units and they completed during the quarter, what? 400 units. So if they completed 400, that includes what? The 100 that were already in progress at the beginning of the period. And I've already given myself credit for the 50 units there, haven't I? So I have to take that 400, I subtract the 100. That means that I started and completed 300 units, right? The way the book made it sound as though they would always give you the started and completed, and they did not here. They only gave me the number completed, which includes the units that were in beginning inventory, which I already accounted for with this 50%, right? I've already given myself credit for those. I completed those units that I had started, and I gave myself that I had started at the beginning of the period, and I just gave myself credit for those. So I only put the 300 down. And then the work in process at the end is what? 200 times the 0.75. That's pretty straightforward. So that's 150. So if I do the math on that, 50 plus 300 plus 150 gives me the 500. Now, the other way that you might have looked at this set of information, and I can't criticize it, is you'd say, well, if they started what? They started during the period 500, and there's still what? 200 in progress. Well, if they're in progress, they're not finished. So they actually started and completed using more of the language of the book, 300, right? And then I give my self credit for the beginning inventory. You could have got the 300 that way as well. So I don't know what to tell you. I can't tell you how to look at this information and how to always use the information the same way to look at these, because they lay it out in different patterns depending on the question. That's why I'm saying you've got to get comfortable with this stuff and keep practicing with it till you kind of get used to some of these nuances as to the way they're laying out the information to be able to extract the information you need to answer the question. Question. Okay, good. We're going to come back to that question 2 in a second, but let's go to question 4 and then we'll pick up question. We'll go back and pick up question 2. Okay, guys, we're a little over 4 minutes now. I'll give you a few more seconds to take a look at this question. Okay, go ahead and take your best shot. We're coming up on 5 minutes on this one, and so I want to move on. Okay. All right. So taking a look. Got a few more final votes coming in. Okay. Okay, so we're at about 50% here. It looks like maybe some of you were still working on that one, so I apologize for cutting you off. But I also want to start to train you around, making sure that you're working at a pace that's going to allow you to get through the questions on the exam. But this one, the correct answer was B. So let's go ahead and look at this one together. Okay, and this one, I gave you a little more time than the other one because the other one was just asking about the denominator, just the equivalent units. Here we had to figure out also what to put in the numerator to come up with a cost per equivalent unit. Okay, so they tell us the information here, and then they tell us that the beginning inventory was 60% complete for materials and 20% complete for conversion costs. Do we care? Because this is what? Weighted average. This is distractor as to what happened for the beginning inventory, right? Okay. Then they tell us the ending inventory was 90% complete for materials and 40% complete for conversion costs. Now that is going to be relevant. And then they give me the cost. Okay. So let's go ahead and figure out the equivalent units first. And so because they're asking me for weighted average, I'm going to give myself credit for all of that work that was done in the beginning. I just pick up that number 16,000. I know I have to have that there, right? Then they give me two numbers here, started in production and completed in production. I like to say, well, look, if I'm sitting here and they did what? They had 92,000 units completed, okay? That means that they also completed those 16,000, didn't they? But I already give myself credit for those 16,000 up there for the 100%. So I subtract this 16,000. That gives me what? 72,000 that I bring over. Okay. The other way of doing this, and this is why I can't give you a flashcard because I don't know exactly how the problem is going to give you the information. And there's a couple of different ways of using the information that's here. You could have said, well, look, they started 100,000. And if they started 100,000 and they still have what? 24,000 still in progress that they haven't finished yet, then that means that they did what? That they started and completed 76,000. So excuse me, 72,000. So actually both these numbers are 76,000. They started and completed 76,000, and I could have got there two different ways, right? What did I do wrong here? Yeah, that's correct, right? So there's two different ways you can get that same number. Now, you don't want to write it twice, but you can get that same number two different ways. Then the ending is fairly straightforward in that you go ahead and you take the 24,000. And they told me that they were what? When I'm doing it, it helps if I know what I'm doing here. I'm looking at materials. And so they were what? 40%, 90% complete for materials. So I take that what? 24,000 times 0.9. And that gives me now 21,600. I add all that up and I have 113,600 is the equivalent units. Okay. Now in this problem, I had to pick up the cost, and for my what? For my materials, beginning was 54.6 and materials used was 468. And I pick up both of those numbers because I assume I did all of that work this period. If this was FIFO, I would ignore the beginning and just pick up the cost added, but I have to take 54,560 plus 468,000. That now gives me a total of 5,2 2,560. I divide that by the 113,600 equivalent units, and I come up with the correct answer here, which was 460. Okay, so I didn't give you a flashcard for the how to always figure out the equivalent units because I don't know how the problem is going to throw the information out at you. And there's a couple of different ways of doing this, right? Question? Okay, good. Then let's go back to question 2, which really should have been put with the last module. So let's just go ahead and look at this one. I'll put the poll up. Be careful, guys. Make sure you understand what the question's asking you for. I'm seeing some folks picking A because they're not carefully reading the call of the question. I'm going to give you 10 seconds. Okay, so I gave you about 3 minutes on that question. I wish the poll would, does the poll show you the time? No? Okay, so it took us about 3 minutes most of us got it right. The answer is D, but I'm also looking at how many folks chose A. A couple chose A, and then on the other thing that's disconcerting is I've got about almost a third of the class that didn't participate on this question, which to me means maybe there's actually no understanding of what's going on here, which is disconcerting as well. Okay, but if I add an A, that gives us a nice percentage because I think some folks maybe misread the question. But Make sure you're trying these, guys. There is absolutely no benefit to throwing up your hands and giving up. None. This is all about repetition. This is all about exercising with this stuff. So, you know, make an educated guess if you have to, but just throwing down your pen and saying, I don't get it is unacceptable. Okay. All right. So what happens? We sit here and they give us some different overhead costs. They tell us, the materials handling, the quality inspection, and they tell us that cost expected. Okay, so these are what in the coming year. So, you know, as I said before, they're maybe doing this in March or something to help them figure out what the predetermined overhead rate should be for the next year. So they come up with what, 320,000 of overhead costs, right? That's what they estimate. And then we have to divide that by what? The estimated hours of 80,000. So they take that, divide it by the estimated. Remember, I wrote in estimated in that formula. We flashcarded that estimated cost divided by the estimated driver, which this example is direct labor, which is commonly the case, but it doesn't always have to be the case. And that gives me $4 per direct labor hour for my overhead, my predetermined overhead rate, right? Then they tell me that the job is going to have direct labor, and it would have helped if they had put a dollar sign there. $6,000 for my labor, $4,000 for my material, and they want the estimated product cost. Product costs are direct materials, 4,000, our direct labor, 6,000, okay, and manufacturing overhead, right? Okay, and the manufacturing overhead has to be applied. So I'm going to take that $4 times what? The estimated hours of 2,000 hours. Okay, and so the estimated cost of this job is going to be the 4 times the 2,000 or 8,000, the cost of the overhead. Then you add those three together. That's how we come to the 18,000. So I think some of you maybe picked this one because you were just thinking they were asking you for the overhead because you got all excited when you got the overhead number and you just saw 8,000 and picked it. And notice how they put it as the first choice because they know that you're going to get excited and want to pick that and move on to the next question and all that. Got to read the question carefully. They're asking about product cost here. Question. Okay, good. Now I said I would come back to spoilage. Okay, and spoilage is very simple. Normal spoilage is an inventory cost. Abnormal spoilage is a period expense. That's all I got to say. Okay, so if you look, flashcard that. And then if you look at this example, okay, they give us these different items, including what? Normal spoilage and abnormal spoilage. Normal spoilage is what? An inventory cost. Abnormal spoilage is a period cost. So they tell us that they produced 20,000 and it's 20,000 good pies, not spoiled pies. Okay, these are 20,000 pies. You don't count a spoiled pie as something that's been produced. And so what happens? They go ahead and they add up the pie ingredients, the baking labor, the plant production, and the normal spoilage is a what? Inventory, therefore it is a product cost. And so we add those up, divided by the good pies, that's 402 per unit, and that 402 per unit will be used to run my cost through work in process to finished goods, and then ultimately the cost of goods sold when I sell the pie, right? Okay. Whereas what? My period cost, as we've already known, okay, were the what? Sales, general and administrative, and yeah, per our flashcard, our abnormal spoilage is a period cost. The idea being that shouldn't happen again. Going to treat it as a period expense. we had a supervisor that was, showed up drunk one day and ruined a bunch of pies or something. I don't know, but that won't happen again because we got rid of that person, whatever. Question? Okay. All right, good. We've looked at all these. So let's go ahead and turn our attention to module 3. And let's talk about something called activity-based costing. Okay. Now, what activity-based costing does is they look at it and they say, look, if you have one estimated cost of your overhead and one driver, you may distort your predetermined overhead rate because different jobs, different products use different resources at different levels of activity. And so what they say is, why don't we come up with multiple predetermined overhead rates, and then depending on how that product uses that particular activity, that's how we'll apply our overhead. Okay, that's called activity-based costing. And with what? With traditional, we have a single pool with a single plant-wide overhead rate. That's what we were looking at earlier. With activity-based costing, and just let's summarize this a little bit better, we have what? We have multiple costs, and we have multiple drivers. Thus, we have what? Equals multiple rates. And the idea is that we're going to what? And you can go ahead and flashcard that about activity-based costing, which basically means that we're going to be more refined in how we apply our overhead. Okay, so notice on the next page, okay, that activity-based costing can be used both in a job order or a process costing system. It can also be used for service businesses, even though we're going to talk about it in the manufacturing context. And I teach a class to individuals at Stanford that are getting a degree in medical terminology. So, I mean, medical technology, I should say. So they're trying to, those folks are trying to get a degree that'll help them to develop medical products. For example, one person that also teaches in this program invented some sort of thing that they can put in the brain of individuals that are having problems with, they get, they have like convulsions because there's something going on with their brain. And this person that teaches in the class, she started a business in a different class, not my class, but in a different class. She invented a device that they can place in the brain and it stops that from happening. So there's some kind of electronic thing that happens and it's cured these, spasms and whatnot that people have because of this problem. So, she started a business. She's an entrepreneur, started a business manufacturing this thing and everything else. So the school wants them to have an accounting class. So I teach them about the activity-based costing by using the context of a hospital. Here's all the different services that the hospital provides, and here's how we can come up with different overhead rates depending on how that particular part of the hospital uses the various activities for the different rates that we're going to come up with. And I'm going to show you here how they do it in the context of manufacturing. Anyway, probably more information than this flashcard is worth, but it could be what? It could be both for a manufacturer or a service business. Okay. Okay, good. Now you come over and let's just look at this example. Okay. And again, they're doing this in the context of a manufacturer, and this company produces, cans and bottles. Okay. So you take a look, 500,000 cans, 150,000 bottles, right? Now they start giving us these different activities. Okay, for example, materials handling. They give us the cost driver for materials handling, it's pounds, and then they tell us the number of pounds that'll be used, 100,000 pounds of materials for cans, 60,000 pounds of material for bottles. That comes up to what, 160,000 if I'm doing my math right? Okay. Production orders, 100 for cans, 100 for bottles. That gives us a total of 200. Product redesign, number of changes, quite a few changes for bottles, not so much for cans, totals 250. And then machine hours, and that's what, a total of 230, if I'm doing my math right, 230,000, okay? All right, so we have the different activities, we have the different cost of those activities, okay? And what we're gonna do is use this information and this information to come up with the cost per activity, okay? So you come over and, well, first they show us, let's just look at traditional, which we've been looking at, the total divided by what? Divided, and if you use direct labor hours as your total, the direct labor hours are 150,000 plus 45,000, which they gave us. Where did they give us the labor hours? We're up here, 150,000 plus 45,000. Okay, so if you used a traditional system, then you would take the total overhead cost, that was all those numbers I showed you a minute ago, divided by those total direct labor hours that we just saw on in the paragraph information. That's $16 per. And then if the cans use 150, that's 2,400,000 allocated to the cans, 500,000 cans. That means it's 480 per can. And looky how interesting this is. If it's the number of bottles, the 16 times the 45 direct labor hours for the bottles divided by the total cost of 720,000 divided by the 150,000 bottles, it's 480 per bottle, 480 per can. This company should be indifferent in terms of cost anyway, of what it costs them to produce bottles versus cans. Now, what they do instead is they take these numbers up here, okay, the 480, the 90, the 250, the 2.3, and then they divide it by the amount of activity for what each one of these activities, the 160, the 200, the 250, the 230, okay? And when they do that, they come up with what? With multiple rates, depending on the activity. And then they apply that depending on how much of that activity each product used. So for example, we saw that the cans used 100,000 of material, right? Just coming from that first page, 100,000 of material for the cans, so 60,000 for the bottles. So for the cans, we multiply that times 100,000. For the bottles, the $3 times the 60,000. The number of orders, right? It was 100 orders for each times the 450. Okay, so no real differential there. The thing that makes the big difference here is what? That product redesign. There's 50 changes for cans versus what? 200 changes for bottles, and that's a fairly expensive activity, isn't it? Okay, so we get a much larger application for that one. And then they do the same thing for the machine, which was $10 per hour. And now they come up with the total overhead cost for the bottles, total overhead cost for the cans. And then when you divide that by the number of units they're producing, bottles are a much more expensive, at least from the standpoint of the overhead, much more expensive product to develop than the bottles. So if I'm, running this factory, depending on what I can charge for the bottles and depending what the direct labor and the direct materials are, I'm thinking cans are the cheaper thing to produce, right? Okay. Okay, good. Now that's just a basic discussion of activity-based costing, but it could also be used for service cost allocation. Okay, So let's just go ahead, and there's two methods. There's the direct method, and the direct method is the most widely used and least complex. And each service department's total costs are directly allocated to the production departments without recognizing that service departments themselves may use these services from other service departments. Thus, we're going to see that the step down method will, and you can go ahead and highlight that in flashcard, will allocate, step down method will allocate service department costs to other service departments. And let's just flashcard that. And I'm kind of rewriting the book here because when I read through what they're describing there, I couldn't understand what they were talking about. I guess it's here. Service department costs are also allocated to other service departments as well as production departments. So maybe that says the same thing. I don't know. But that's what we're going to do in the step down method. Okay. So let's just go and let's look at the examples. Okay. Direct method. Okay. And with the direct method, we have what? We have the two different divisions, Division A, Division B, and we have the service department activities, the planning and the division administration, HR is the department, IS and HR are the departments, and then we have the different activities, okay? And then we have the cost drivers, computing hours, performance appraisals. Okay, so when we look, the computing hours, 9,000 plus 6,000 gives me what, 15,000? And the 2,800 plus the 2,200, I believe, gives me 5,000. Okay, now if I'm using the direct method, I am going to just sit here and say, okay, the planning and reporting costs were 2.2 million. That's right there. Okay. And for information system and for the HR, it's what? It's 975,000, right? I'm trying to turn that to yellow. Okay. Okay, good. Now we come over, and so we pick up that what, 15,000 is for the information system. So we go ahead and we have the 2,200,000. That's 148 per hour. We have the 5,000 up here for the HR, so that's the 975 divided by that 5,000. That's 195 per, I guess, performance appraisal. And then we just go ahead and apply that based on how much each division used. Division A used 9,000 and had 2,800 appraisals, and we pick up those two numbers and we just go ahead and multiply them out. And we do the same thing for the Division B based on the number of hours they used. Okay, and that's how we apply those. Okay. Okay, good. Now you come over, and with the step down method, now we're going to go ahead and we're going to apply some of the service department costs to the other department, the other service departments. So they tell us that the facts are the same, except performance appraisals administered by the HR department to the information system accounted for an additional 200 appraisals during the operating year. Okay, so again, you have what? You have the 5,000 that was used by the two departments, which we calculated earlier. That's the 5,000. But now we have to do what? Now we add the additional 200. So now we've got 5,200. Okay, so we take 5,200 and divide that into the cost for the HR, right? Again, that 975. And sometimes half the problem here is just remembering what the numbers were. Before it was divided by 5,000, now it's divided by the additional 200. That's saying that the cost is 187.50 per appraisal. And since the HR division had 200 appraisals, they have what? 37.5 of that cost that needs to be allocated to the IT services. Okay, so now we pick up those total IT services costs, which were that 2.2 plus the 37.5 divided by the 15,000 hours. Okay, that gives me what? Now 150.5 per hour for the IT. And now when we go ahead and allocate those costs to the service department, remember the 15,000 hours, guys, just to kind of go back, came from up here, right? That's where the 15,000 hours came from. Okay, but we divided it by a different cost now because we've added the cost of the appraisals, the additional 200 appraisals that were done. So that now gives me this 150.5 per hour. And we use that to allocate the 9,000 hours. And then for the 2,800 appraisals, we have what? We have this 187.50. The 187.50 again is that number that we recalculated when we brought in the cost of those additional 200 appraisals. And so that gives me the 187.50 per appraisal that I use for the appraisal cost for the first Division A, and I do the same thing for Division B. Okay. Question. We don't have time to do joint costing properly, and so I don't want to rush it. I could try to do it in 9 minutes, but I can't. And that unfortunately puts me in the position where I'm going to have to stop in between modules, okay, in the middle of a module. So what I want you to do is basically get through, and I'm sure there's plenty of work for you on the table to go ahead and do your homework up through module 2. And then you can save module 3 for next time. And we'll complete chapter 3 next time. Question? Okay, guys, I know that's a lot of information, so I think we'll go ahead and, take off a little bit early here. And I will see you on next Tuesday, and we'll pick up with this joint costing discussion. Joint product discussion.
Sounds good. Thank you.
Okay, guys, have a good night.
You too.
Thanks.
Good night.
Good night.
Thank you.
All right.